Hi, Andy Norrington here, independent financial advisor at Sterling & Law based in Croydon. Today's video is understanding pension tax relief. This is a complicated subject. As always, my videos are designed to be high level for information purposes only, and this is not financial advice. Aegon estimate the average UK pension fund to be worth £50,000. As a healthy 65-year-old with £50,000, you could expect to buy a guaranteed income of about £2,400 per year. By adding this to your full state pension of £9,100, you're looking at a guaranteed income in retirement of about £11,500 per year, which of course is less than £1,000 per month. I'm sure most would agree that could be quite challenging to live off. The government recognise we have got a huge shortfall when it comes to pension provision, and as such they've set up very generous rules when it comes to tax relief on pension contributions. The majority of the UK public are not aware of this and are missing out on a fantastic opportunity to build long-term wealth and secure a better future. So how much can you contribute to a pension scheme? Well, broadly speaking, it's linked to your earnings. It's the lesser of your earnings or £40,000. So if I was earning £60,000, my limit would be 40 because that's the lesser of the two. Whereas if I was earning 25,000, my limit would be 25,000. Non-earners can contribute up to 3,600 per tax year. Now, if I was a high earner and I wanted to contribute more than the 40,000 limit, if I had a UK registered pension scheme open for the last 3 years, it is possible I could contribute more than 40,000 as long as I don't exceed my earnings for the tax year. And this can be done by using something called carry forward, which allows you to bring forward unused allowance from your 3 previous tax years. So to give you an example, let's say I'm earning £90,000 and I'd like to make a contribution of £90,000. I'd firstly have to use up the 40,000 from the current tax year. I'd then go back to the earliest of the 3 previous tax years, which would be 2017-18, and use up any unused allowance from that year. It would then spill into the 2018-19 tax year, and again I could bring that forward for this current contribution. Now, any unused allowance from 18-19 and also from 19-20 is not lost. In future you can go through a carry forward process again to make sure you do use that up. So how does the tax relief actually work? Well, all individuals are entitled to full relief at their marginal rate on contributions. So if I made an £800 contribution to my personal pension, that would be grossed up to £1,000. So that's already £200 for free. Either that would be credited instantly, or the pension provider would contact HMRC and it might take 6 weeks to get it back. That depends on which pension provider you're using. Now, if I was a higher rate taxpayer, it's slightly more complicated. A higher rate taxpayer is someone who's earning over £50,000. So in this example, I would then contact HMRC and explain to them that I'm a higher rate taxpayer and I've made a gross pension contribution of £1,000. HMRC would extend my basic rate band by £1,000, which means that's £1,000 of earnings, which was previously getting taxed at 40% higher rate, is now taxed at 20% basic rate. So an additional £200 is due. If you're employed, HMRC will contact your employer and your next paycheck should be £200 higher. Or if you're self-employed, you can expect to receive a cheque in the post for £200. So it is quite complicated, but obviously there's free money to be had from HMRC. Why would you not take it and make the most of that benefit? It's absolutely fantastic and it is the best way to build long-term wealth. If you have any questions, please feel free to contact me directly, or also I'd welcome any questions below. It'd be good to have a conversation on there. Thank you for listening. I hope it's been worthwhile.